Did you get a notice that your payment's going way up and your escrow account's all screwed up? How does that happen? I'll tell you. So a lot of times, for one thing, taxes, especially in Colorado and in many states, are paid in arrears. And what that means is when a lender closes on your loan and they set up your new escrow account, the taxes that they are using for the estimate, the amount of money to collect for taxes on a monthly basis, is based on last year's tax bill. So if your home gets reassessed, and of course all the values are going up like crazy right now, so lots of reassessments happening, and your value is increased by the tax assessor and they increase your tax bill, then when the lender gets that bill and they have to pay it, then everything they've been collecting all year long in anticipation to pay the bill, which was all collected based on last year's bill, is now not going to be enough. So the lender gets the new bill, all of a sudden it's higher than what they had saved for, and now what is owed to the county is more than what was collected and more than what's in your escrow account. It's happening with insurance too. Same concept. Lender will collect whatever that insurance premium is. Let's just say it was, $3,600 for the year, then the lender is going to collect $300 a month every single month so that next year when they get the bill for the insurance, the money will be in there, it will have been saved, and they can pay the bill. Well, what happens if the insurance company increases your insurance and the lender gets a bill for $4,200? Well, they didn't collect enough to pay $4,200. We collected enough to pay $3,600 in that scenario. So what happens is those bills still have to be paid. The lender's not going to allow your insurance to lapse by not paying it. The lender's not going to allow you to get a lien on your property from the county by not paying the taxes that are due. So they're going to go ahead and pay it for you. Think of it like a loan. They're going to pay what needs to be paid, but now they have to go back to you and collect that back payment because now what was in your escrow account wasn't enough. And now you have a double problem. They have to collect for all of the amount that they just paid out, which wasn't in your escrow account, and they also have to start collecting on a monthly basis at that new higher rate. So sometimes you'll see your payment go way up, and what they're doing is the amount of the new escrow, so the new taxes, the new insurance, is higher. And on top of that, they figured out how much additional they had to pay out that wasn't in your escrow account. They divide that by 12 and they put that into your payment. So it's kind of a double whammy. So sometimes if you see what's happening or if you're confused and you look at your mortgage statement, you call the servicer, you look at your escrow analysis, there's going to be a shortage that they're making up for, and they're collecting for the new higher amount. If you pay the shortage, then your payment won't go up as much. It would only be the difference between what you were paying in the escrow account every month to the new taxes and insurance, but you're not also making up the back pay. So if that's the case and you have those funds to pay that shortage, that will alleviate that payment going up so drastically. And that's something that you can take a look at, talk to the servicer, and see if that's an option for you. If it's not, then the monthly amount might just be what you need to do. And furthermore, if you have had great payment history and you have lots of equity in your home, sometimes you can have your escrow account removed from the loan and you just pay your taxes and insurance yourself. If that's something you like to do and you don't want an escrow account, that's always an option for sure on a new loan if you have at least 20% down payment, and sometimes on an existing loan you can get them to remove it. So, and lastly, escrow accounts include private mortgage insurance. And if you're paying private mortgage insurance on a home because when you bought it you didn't have a high enough down payment, but in today's world, you have lots of equity, it might be a good time to look at a refinance and combine some cash out to pay off debt, remove your private mortgage insurance, shore up and cure your escrow account, get a month off with no payment, and maybe take cash out for a vacation, college, other things that need to be done in the home, whatever it might be. So any questions on escrow account, potential refinance, whatever it might be, give us a call. Michelle.oddo, the Oddo Group, Luminate Home Loans. We'd love to help you figure out what's happening in that escrow account and if a refinance might make sense for you. Give us a call.